Hey everybody, Dave here, Hidden Freedom Investing, and today we're going to talk about Schwab's Security Lending Fully Paid Program, or SLFP. That's the acronym for it anyway. So I wanted to look into this program after watching a video from EasyWealthBuilding, and she was basically lending out her shares and getting anywhere from $50 to $100 to $200 a month just from lending her shares out. Now, I had heard of it before from Interactive Brokers. They had a program as well called Enhanced Share Program or something like that. I had never used it with Interactive Brokers, so I was kind of intrigued when I saw E-Trade had the option. So she's using E-Trade and I'm not, so that's when I started to dig in to see whether or not Schwab offered something like that. So let's go ahead and take a look at her channel if you've never been there before, and go ahead and leave a comment and let her know that you found her channel from mine. So let's go ahead and take a look at my portfolio real quick here. So this is my dividend portfolio, and I was kind of figuring, hey, I got these shares in here of all these great stocks, right? And why not just have some extra money that could be generated off of these shares? And I already knew about the program. I knew it existed. I just didn't know if Schwab offered it. So that's what we're going to talk about today, and figure out what I found out from Schwab. So let's go ahead and dig in. So after doing some digging, that's what I came up with: Schwab Security Lending Fully Paid Program. So I was really excited when I came across the program until I got to the fine print. So well, let's go ahead and see what we found out. When you enroll in the Securities Lending Fully Paid Program, you can receive monthly income for lending your fully paid securities to Schwab. You can sell loan securities and end the loans at any time. There's no cost for you to participate in the program. Well, that sounds perfect, doesn't it? And you're probably thinking, what's the catch? Well, there really is no catch, but it's not, there's not a catch. There's some downfalls, and not every broker has these downfalls, but let's kind of dig in here a little bit here. The benefits can be considerable. Typically, securities remain in an account, waiting possible share price to increase and capital gains. That means that you can still make money off of capital gains and for share prices increases and all that. So just like you own shares now in your brokerage account, if the stock goes up, you're gonna make money. Well, you're still gonna make money off your shares if the stock goes up. Okay. In addition to the capital gains and all that, these shares being enrolled in the SLFP program, your qualified shares get a chance to work even harder. So Schwab borrows the shares and lends them to other clients or financial institutions. Securities are usually borrowed to facilitate a short sale. In exchange for lending these shares, you are paid income. In general, the greater the demand for the securities, the higher your potential income. So if you're not familiar, when you short a stock, you're essentially borrowing those shares, all right? And then what you do is you end up buying them back theoretically at a cheaper price, and then you keep the difference. That's what shorting a stock is, all right? So, and some brokers like Interactive Brokers, for example, if it's a very popular stock that's being shorted, it might be very difficult to find shares to even borrow. So Interactive Brokers has an option right there. You just right click on it and it'll tell you how many shares are even available to borrow. So I don't know if every broker has that, but so that's what they're going to be doing with these. They're pretty much just going to be lending them out so they can be pretty shorted, but there is a couple of caveats we want to get to. But as far as like a dividend portfolio is concerned, these stocks in here are probably not really good short candidates. You know what I mean? So you don't see a Tesla in here, right? So I just don't think a lot of these stocks are going to be a real good candidate for the program. Now there could be some, issues, Wells Fargo, when they had that account issue or whatever, I'm sure people are shorting it or something. So there is times where something could be loaned out, I think, and you could make some extra income from it. So, but in general, I think these are pretty safe stocks in my portfolio. I'm not going to scroll all the way down, some of the bottom down here, but they are very stable stocks in my portfolio. So, but if the potential is there to make a little bit of extra income, then that's great. So, but let's get to a couple of caveats. So, unlike the broader markets for common stocks, the market for security lending is relatively small. However, Schwab has the expertise and technology to connect those who have the securities with those who need them. giving you an opportunity to earn more on your securities. All right, well, that sounds great. What's the catch? How the program works. Because the Security Investor Protection Corporation, SIPC, may not cover your securities while Schwab is borrowing them, you will receive collateral for your loans. This protects you in case there is a termination event, such as an unlikely event of Schwab filing for bankruptcy protection. So if you're not familiar with the SIPC, it protects you if your broker goes bankrupt, basically. So, and I've talked about it in other videos. You want to make sure you're always in a broker that's, follows the regulations in the U.S. or I don't know which country you live in, but you want to make sure you're covered if the broker goes bankrupt. So this kind of sounds bad because you may not be protected. So, well, Schwab has a solution for that. So, they basically essentially open an account when you sign the agreement and all that. They open an account and it's specifically just for this program. And if you're lending out, say, $10,000 in stock, then they essentially deposit about $10,000 into that account. That's the collateral. So, and that's what this document is here. Cash collateral for securities lending fully paid program. So that's what this document's all about. It's the questions about that whole particular portion about lending them out and being protected by the SIPC. So this is great because look at this. Yes, cash collateral qualifies for the Schwab Bank Sweep feature, which means you're going to earn interest on that money that's sitting in there. So if you're lending out $10,000 in stock, then you're gonna earn interest on that $10,000. The bad news is, and I know what you're thinking, you're probably thinking, oh, I could just invest that in more stock, or I could take it out and spend it on a Louis Vuitton. No, you cannot. So the only time that money can be taken out is if there is an issue with the agreement. So like a termination of the agreement, due to bankruptcy or something like that. So that is not yours unless there is a bankruptcy or something like that. So how is the cash collateral protected? Cash collateral qualifies for the bank sweep feature. Funds swept to Schwab's bank as part of the sweep feature are covered by FDIC insurance up to $250,000 when aggregated with all other deposits held by the client or same capacity as Schwab Bank. So that's typical. FDIC covers up to $250,000. I think even some up to $500,000 if you're have a big account or something, then you may have to call them up, but that's pretty standard. So SIPC and FDIC is always something you should be checking for when you open a new brokerage. So your cash is covered by FDIC in this case here. Does the value of the collateral change with the value of the securities? The amount of cash collateral is adjusted daily to 102% of the value of the securities on loan to Schwab. Schwab provides an additional 2% of collateral to help account for intraday fluctuations in the value of the securities on loan. So you're pretty much covered there. I'm not worried about the cash collateral. I'm not worried about them going bankrupt or FDIC. It sounds like I'm covered from that aspect. So you're probably thinking, what is the other catch? So there is a catch, and at least in my situation, and could be for other situations as well. So before we look at that, let's look at the process here. We just basically can complete this loan agreement enrollment form. Schwab creates a new supplemental brokerage account for you, and that's what I was talking about. They create that separate account, and that's where they deposit the collateral and all that. Schwab makes arrangements for your collateral. The securities included in the SLFP program are moved into your supplemental account. Schwab borrows securities from your supplemental account. Schwab pays you an agreed upon loan interest rate. You'll receive monthly statements for your supplemental account. You'll be asked to confirm your loan on the quarterly basis pursuant to regulation. So there's a little fine print here, and this is a little bit about what we're talking about as far as the caveat. So you're still thinking, well, can I sell my stock if there's a market downturn? Yes, you can. There's no, it just acts, there's no difference from that perspective. You're just, loaning them out. You're going to get money for that to loan them out. You're still going to get, the capital appreciation. You can still sell them anytime you want, and you're still going to get dividends with a catch. Income is calculated daily based on the closing price of the loan shares on a 360-day year. Income is credited directly to your Schwab account on a monthly basis. Share price and interest rates may fluctuate based on market conditions, which will affect potential earnings. Income is reported as other income in Box 3 on IRS Form 1099 Mystic for taxable accounts. Now, if you're not familiar with the 1099 Mystic, and then you are going to get familiar with it, please take a moment to go ahead and hit that like button, subscribe, and set that bell notification. Interest rates used to calculate earnings are subject to change without prior notice. So yeah, 1099 Mystic is essentially, if you did like contractor work, something like that, they could pay you on a 1099 Mystic. It is not 1099 DIV. It's not 1099 INT. All right, so it's a 1099 Mystic, which means you had like some other income from, from doing some work, and they paid you on a 1099, so on a Mystic. I've gotten a couple of those for various things I've done over the years, but so that is a slight issue right here. All right, so, and this is what we're talking about, tax consequences. All right, so instead of actual dividends, you will receive substitute payments in lieu of dividends, PILs. This may have tax consequences because PILs may not be entitled to the same tax treatment as many have been applied to dividend payment. So if you're not familiar, qualified dividends, you get that 15%. Unless you're in a really high tax bracket, you might have to pay 20%. But in most cases, you're going to pay 15% on your dividends, your qualified dividends. Schwab is not required to compensate you for any differential tax treatment between dividends and PILs. That's the gotcha right there. So if you're doing a dividend portfolio like I am here, my dividend portfolio here, every one of these stocks in here pay a dividend. So I want to make sure every one of these qualified dividends, other than the realty income, is treated in such a way that I'm paying 15% on it. I don't want to deal with PILs. All right, so that's the big gotcha in my opinion. So I'm not worried about SIPC protection. I'm not worried about the loss of voting rights. Maybe some are, but I'm not. During the term of the loan, title to securities is transferred to Schwab, providing Schwab with all incidents of ownership, including the right to vote on corporate actions and the right to transfer the loan securities to others. So yeah, I don't care about that. I do care about the tax consequences. Market risk I'm not worried about because it's going to act exactly the same. You can still sell it. There's no difference there. So this is Schwab's plan for lending out the particular shares. Now, if you have a portfolio that's not full of dividend payers like this, maybe you're in some larger stocks, like Tesla's a really good example that you could use this program on because it's a highly shorted stock. It's kind of a speculative stock. So if you have a lot of speculative stocks, those could be a really good candidate to generate some extra income. And they don't pay dividends. I would probably recommend not doing this program with a dividend paying company or stocks. Now, with that said, make sure you check with your brokerage to make sure that their particular program works like Schwab's, because some brokers will actually try to avoid ex-dividend dates and in the program. So Schwab doesn't appear to do that. They don't mention anywhere that they do that. But some brokerages will essentially, not loan those shares out during the ex-dividend time. So that's kind of cool. But unfortunately, it doesn't look like Schwab does that. So with that, I think that's it with this. If if I find out anything else with this program, or I might call them up and find out, if this can work in a tax-deferred account or something like that. Get kind of the rules and regulations on a tax-deferred account. I don't even know if it's available on a tax-deferred account. So, but we'll find out. So with that, go ahead and leave me a comment below if you have any questions, comments, or concerns. Go ahead and like and subscribe, and we'll see you in the next video. Thanks for watching.